Good morning, ladies and gentlemen.
Good morning.
Right. For today, we are going to continue with our business plan program. And today we are going to discuss cash flow plan. And cash flow is part of our business planning, and it's also part of our financial planning. And some of the benefits of cash flow is that it enables you to plan your finances of your business into the future. So for instance, you can plan your business cash flow for the next 3 months, or the next 6 months, or even the next 12 months. And the components of the cash flow are your inflows and your outflows. Your inflows basically constitutes how money comes into your business, and your outflows basically constitutes how money gets out of your business through probably the purchases of your raw materials, payment of your salaries, payment of utilities, and so on and so forth. So in designing our cash flow, first and foremost, we start with the cash that we have at the beginning of the month. And then we also indicate our revenue streams. Our revenue streams are where money is coming into the business. An example is sale of our products, or monies that are paid to us through the services that we offer to our customers. So you can start designing from month 1, month 2, month 3, up to month 4. So when you have the money that you are starting with the beginning of the month, you add that to your inflows in the form of your sales or revenue that you make in that particular month. That will give you your total cash inflows. Now when we come to the outflows, you indicate to us monies that you spend in purchasing your raw materials or finished goods meant for resale or retailing. And then also payment of your salaries forms part of your business outflow. Then you sum all the monies that went out of your business to constitute your outflows. So at the end of the chart, you are supposed to have how much money is left at the end of the month. So to get that, we add our total cash in, and then we subtract our total cash out from it. That will give us the cash that we are having at the end of the month. The cash we are having at the end of the month will constitute the cash at the beginning of the next month. Are we clear about that? Yes. So for instance, we are in June now. So at the end of June, the cash, our closing cash balance is going to be the opening cash balance for July. Then we continue projecting our inflows for July. So we do an estimation of revenues that we are going to get for July. And then we add it to our cash at the beginning of July to get our total cash inflows. And then also we estimate the expenses that we are going to incur for July. Example, the purchases of our raw materials and the payment of utilities and then our salaries. So we total the outflows that will constitute giving us the total outflow for July. So we'll take out the total outflows from the total inflows for July. That will also give us the cash balance at the end of July. So this is the method or procedure that we use to design our cash flow plan or our cash flow budget. It helps us to also enable us to plan whether we are going to encounter any cash deficits ahead of time. That is one of the importance of having a cash flow. Because if you don't prepare a cash flow, you may end up having a cash deficit without planning to make room how you are going to finance that cash deficit.
Cash flow, that's what comes in, that what goes out. Is it related to income and expenditure account in a way? Because income and expenditure account, that which comes in and that which goes out. And also when it comes to what is left, that is carried forward to the next month to begin the business. Is that what to do in cash balance brought forward and those things?
Yeah, there's a difference between the cash flow and then the income and expenditure. Income and expenditure forms part of your financial statements. So for your financial statements, income and expenditure is part, your balance sheet also part, your cash flow statement is also part, and then notes forming the accounts is also part. So these four components make up your financial statements. And the income and expenditure is a summary of your financial activities that took place in the 12-month calendar year. Yes. So with the cash flow, you are only making a projection into the future, how your finances is going to look like. But for the income and expenditure, you are only going to prepare your historical financial records from the activities that have taken place over the accounting period.
So the balance sheet for the month, is that what you are? January balance sheet, February, that will help you get your balance sheet as at the first December.
So when we talk of balance sheet is as at a particular time or day. Balance sheet changes every day. Balance sheet changes every day. Your balance sheet today will be different from your balance sheet tomorrow. Yes. So in a nutshell, when you finish preparing your income and statement account, you only prepare the balance sheet as at the end of that accounting period. So we normally say that balance sheet as at December 31st, 2021. But when you are preparing the income and expenditure account, we say that income and expenditure account for company ABC for the year ended 2021. Yes.
Sir,
yes.
You are talking about income, expenditure, Are we anything like profit?
Anything like profit?
So I want to know whether when it comes to the planning and other things, that profit, that word profit,
Yes.
is it company?
Right. So for our topic that we discussed today, the cash flow, for every prudent business, it is expected that your inflows will always be greater than your outflows. It is in that way that you can estimate profits for the business. When your outflows are more than your inflows, it means the business is going to run into losses. But in the cash flow, you can have a deficit in a particular month, and you can also have excess in the following month. But when you add all the nets, you can have either a profit or a loss.
So when Madam asked the question, what came into mind about the profit? Maybe for you to know that it made profit or not. Is that where trading and profit and loss account comes in?
Hey, that is true. Because you want to estimate your profit into the future, that is why you are preparing your cash flow. So that, for instance, we have done our cash flow from January to December 2022, which we did at the end of 2021. to project and know what is expected to come into the business and then what is also expected to go out of the business. So when you are making those projections and you realize that you are going to run into deficit, then quickly you come back to your drawing board and review all your business activities where you can cut expenses or costs in order for you to make your profits. Yes.
From the questions and discussions, I realized that we either make profit or loss as a result of the businesses we are running with our expenses. Let's say I'm working at this business sector. All of a sudden, somebody dashed me money, which I didn't work for. Can I categorize that as a profit I've made, or what name is given to those sorts of money? I've not worked for it, but it was given to me. So where do I put that money?
That one does not form part of your business revenue. It's your personal monies that you've obtained through a gift. So it cannot be part of your business revenue. You know, when you are running your business, you try and separate yourself from the business financial activities.
So when it's happening like that, can I decide to add it to the cash flow plan as we are talking about?
There's another way. If you want to add that gift to your business, it will mean that you want to increase your business capital. So it is like you are now transferring your personal funds to boost your business capital. If your business capital is, let's say, 1,000 cedis, and somebody dashed you 100 cedis, so you have decided to loan that 100 cedis to your business to increase the business capital to 1,100 cedis. So in accounting terms, though the business is yours, we treat it as you have given a loan of 100 cedis to your business. And at any point in time, too, you can decide to withdraw that loan from the business. And that will be a repayment of the loan from the business into your personal